Welcome to Bears in Exile. Today is December 7th, and this is the market overview. Sorry that it is coming so late tonight. I am been on the road a lot, and it has been, at least today, extremely difficult to get back at a reasonable time, so away we go. I missed the entire day in the market, so only a few minutes ago we got to really take a look, and as usual, very, very interesting. You can see on the Dow we ended today with a spinning top. I do not like spinning tops, but that is what it is. You'll also notice that it has broken these previous tops back here. Not one, but both of them. So only one left, and we were hoping that that was not going to happen. We did know that it was a potential, a possibility, what have you, and it has done it. So good for the bulls. CCI still massively high. Stochastics also very high, and really not showing yet that they are ready to roll over. 14-day RSI moving average ticking down, RSI ticking up, histogram ticking up, MACD ticking up. So with making a new high, do we still have divergences in the 60-minute time frame, or have they been broken? Well, we still have the stochastic divergence, we still have the CCI divergence, we still have the RSI divergence, still have the MACD divergence. So yep, it's still there. Moving right along to SPX. Now here's where it gets interesting. It was denied at the 200-day moving average. It did not break a previous high. CCI actually ticking down. Stochastic still hanging out up high. Downtick on the 14-day RSI moving average. Uptick on the RSI. Uptick on the histogram. Uptick on the MACD. So this is not nearly as optimistic as the Dow. That's very interesting. No need to rehash the 60-minute, but yes, this is could be an issue for concern. But boy, ended today with a hammer. Not exactly what you want to see at the possible top of a range. Although these other possible reversal signals have not produced anything as of yet. So maybe this hammer is nothing, but nonetheless, it is there. The VIX. Inverse hammer, actually maybe a miniaturized, nope, it's an inverse hammer. And it, let's see here, with the uptick, it almost met the uptick today, but it's creeping in on the $30 mark, which is very important. So very interesting. Downtick on the 14-day RSI moving average. We've been talking about that in the last few videos. Although the stochastics are underway to and climbing. Uptick on the CCI, downtick on the RSI, uptick on the histogram, side tick on the MACD. Definitely not perfect, but very, very interesting. TNA, look at that. We have another hammer. And so does that make this the top of a range? Well, we just don't know yet. But still interesting that it's there. 14-day RSI moving average still ticking down. Stochastic still very high. Downtick on the CCI. And uptick on the RSI. Uptick on the MACD. And a side tick on the histogram. I believe that's a side tick. So certainly it is entirely possible for this to roll over, but we're just kind of hanging out here, waiting to see if there is a break to the upside. UUP. Not a hammer, not a spinning top, just a little red blip as it sits right above the major price consensus level and the bullish bar, although the middle Bollinger Band is getting above the short-term moving averages. So I'm sure that the bulls are hoping that the dollar will go down and produce a rally in the market. 14-day RSI moving average still ticking up. The stochastics are still mixed. Downtick on the RSI, downtick on the CCI, downtick on the histogram, downtick on the MACD with the bearish cross, except for the 14-day RSI and indecision in the stochastics. This doesn't look so good, but if it does break the major price consensus level, hey, Maybe we will get a decent move down, but still, we're just kind of in this holding pattern, just waiting. FXE, same thing as UUP, nice inverse. 14-day RSI moving average still pointing down, indecision in the stochastics, uptick on the CCI, uptick on the RSI, uptick on the histogram, bullish cross on the MACD. It does favor bulls with FXE, and it does favor bears with UUP. So maybe we will have some further upside. Boy, we just need a break in one direction or the other. GLD ending with a hammer, and it still looks like a double flatline to me. Until it gets away from it, I'm not comfortable with this at all. Uptick on the CCI mixed in the stochastics, downtick on the 14-day RSI moving average, uptick on the RSI, uptick on the histogram, and side tick on the MACD. So really nothing to see here. And SLV, very similar. Indecision with the stochastics, down on the 14-day RSI moving average, uptick on CCI, uptick on the RSI, uptick on the histogram, and slight uptick on the MACD until it moves. Not touching it. And there it is. And once again, sorry that this could not come out earlier, but some days it's just like that. And waiting to see exactly what happens. Boy, you know, the bulls in the Dow just have it going on. All they need to do is spark a short covering rally, and my entire thesis of going down is just busted wide open. Matter of fact, it's kind of busted already. But so it is what it is. But man, that's still the S&P. Nothing like the Dow. Nothing. So we'll be watching with bated breath. And you know what? Might as well take a look at GE and see what we see. GE can confirm the Dow. Let's see if it does. Well, it did close above this previous high. That's a good thing for the bulls. And we do have an uptick in the 14-day RSI moving average. That's really good for the bulls. Stochastics are high, maybe they can just stay there. CCI very high, maybe it can just stay there. Uptick on the RSI, uptick on the MACD, uptick on the MACD histogram. Not too shabby. At some point this is going to need to do a bar retest after it gets all the way through with the short-term moving averages and starts to flip the bar. But if it comes down for a kiss of the bar and it bounces off, ooh, then the rally is real and it's already here. So gonna have to be watching this one as well, and it is a miniaturized spinning top, so we definitely need further indication from tomorrow. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.